Hello, everyone. I think we have quite a number of people already present. My name is Simona Kera, and on behalf of the CIM MES Discussion Group Committee, I am delighted to welcome you to our March 19th seminar. Today, we are honored to feature Avakash Patel, who is a senior executive with over 30 years of experience in mining, metallurgy operations, and capital projects, with a focus on business growth, strategy, and governance. Aku will be presenting the topic due diligence for mergers, acquisitions, with a focus on site visits. In his presentation, he will explore the technical 5 Ws of site visits and share practical tips and potential pitfalls to watch for when conducting these assessments. Joining me today is Carlos da Costa, chair of the MES discussion group, who will be assisting with this session. And to give you a little bit of background about us, we are at the Canadian Institute of Mining, Metallurgy and Petroleum, also known as CIM. It is a not-for-profit technical society representing professionals from Canada's minerals, metals, materials, and energy sectors, and it was founded in 1898. It comprises around 12 societies, 30 local CIM branches as well. The Management and Economic Society, the MES, a society within the CIM, encompasses members who contribute to all aspects of the management and economics of companies active in the mining sector. Through events like this one, MES provides platforms for industry professionals to exchange insights and ideas on economic management and financial topics in mining. Everyone is welcome to join CIM MES, and we want to extend our gratitude today to our generous sponsor, IAMGOLD, for supporting this event. We encourage in this event audience participation, so if you have any questions during Aku's presentation, please feel free to type them into the chat box in the menu, and we will do our best to cover them during the Q&A session at the end. The session is being recorded, so at the end of the Q&A, Carlos will walk you through how to access it later. And now, without further ado, please join me in welcoming our presenter, Aku Patel. Aku, take it up.
Thank you, Simona, and thank you, everybody. I'm going to start quickly, and I'm just going to turn off my video so I can get the presentation started. So the presentation is about site visits for due diligence, and this first slide is mostly about who we are, but I think that most importantly, many people do site visits, technical and non-technical professionals, and this is basically a very high level tips and traps that might help while you're on a site visit. And the presentation is basically broken down into 2 parts, the 5 Ws of a site visit and hidden treasures, some information that's not very open in terms of academia and doing site visits, things that are really learned from the trade. This is a very high level presentation, so if you've done a lot of DD for different mining projects and acquisitions, and if you've already done a lot of site visits, I don't know whether you're going to gain a lot, but I'm sure that you'll have some input afterwards. So the first thing is the who, and I think that it's very important to look at the who. The reason is because, financial and risk inputs into a financial model are an outcome of observations and interpretations and conclusions by people. And so who you choose to go on a site visit is pretty important. And site visits can have often a range of people, from a single person, a generalist, or maybe an investor, a single investor or prospector going on a site to identify what they see as valuable, all the way to large groups, especially if it's a massive acquisition or a massive investment by, a consortium of, say, institutional lenders. Then there'll be a large technical and financial team of experts that could be going on a site visit, and that includes all sorts of different disciplines, backgrounds, and I have a list of them here: geology, mining, metallurgy, the technical ones and financial ones, and lawyers, and all sorts of people could be going on a site visit. I think when it comes to the who, the important thing is that the stage of development of a particular project managed property is pretty important, and the reason is because different disciplines may have different value at different stages of a project's development. And I've given an example here. If you have a greenfield project with almost no drilling, then either maybe a process person or an infrastructure person could look at the site layout or see whether there's power, water, the other things that are required when you're developing or looking to do drilling or something like that. In addition to a geologist, of course, that would be looking at outcrops and things like that. Alternatively, if you have, say, an operating smelter that requires an investment, or you're looking at acquiring and you go on that site visit, then maybe you need less of geology and maybe more of a process person or operating and maintenance people because the place is operating. I guess the tip here on the who is that choosing the appropriate team, both for the stage of project development and for the type of mine, project, or facility, is important. And the one big guidance would be that if the opportunity presents itself, I would always recommend that you go on a site visit. You don't know what you don't know. And often when you look at a data room or information is provided by the sell side or the buy side or whoever, then the key thing is that there's always gaps. And without being on a site visit, you can't ask a lot of the questions to the pertinent people that are there, which is again part of the who. I think the big trap when people are looking at site visits is often after the first stage of diligence, maybe the red flag analysis. People often look at going to, oh, well, we have a team and now we've passed the red flag analysis, we're going to go on a site visit. But we're under the gun to go quickly and we have a limited budget for these things and it's going to cost a lot to close a deal. So let's use budget to determine the site visit team. And I think that the value in the visit will far outweigh any costs associated with either poor, omitted, or incorrect site information, because that stuff can become critical in terms of assessing risk and value in the financial model. So the first of the W's is who, because people are the most important thing, in my opinion. And then the what. So I broke down the what into commodities, and the commodities that are broken down to here, maybe into 8 categories. They're listed here, and there's overlap, of course, because no place is it, a battery element could be considered a critical mineral as could be an industrial mineral. So I think that that's not super important, but understanding the commodities is important. And the reason is when you're going on a site visit, having a person familiar with that particular commodity, I think, is very important. And the reason is because there are nuances per commodity, whether it's industrial mineralizers for fertilizer or gold or precious metals, they have different requirements. And when you go on the site visit, when you're trying to observe or look at things in terms of risk or assess value, a key thing is understanding the commodity because of those nuances. And I have an example here. If you're going to look at gold, then the security requirements are pretty important of, the mine or the operation and the infrastructure. And then versus infrastructure, material handling, say for bulk stuff, like say iron mines or copper mines, looking at massive railroads and things like that, because in a gold mining operation, in most cases, you're not moving, say, 2 million tons a day. Whereas that could be possible in an iron or copper mining, project. Whereas in a copper mining project or an iron mining project, you're not worried about somebody taking some iron out of the place. So having an understanding of the commodities and having somebody familiar with it can address some of those nuances to be looking for some of these key things that are commodity specific. Now, there's a trap with that similar commodities have similar site visit key areas of concern. In general, that could be true, but mining is very site specific, and there's exceptions in each commodity in terms of size, complexity. And for example, you could be looking at an iron mine or copper mine, and the first thing that comes to mind is open pit. But, maybe that particular copper mine is an underground or IOCG deposit. And so now you do need somebody that has, underground mining experience with you on that site visit. So it's just a key thing to remember. The commodities, I think, having somebody with commodity specific experience on the team on a site visit is important. At the same time, just because something is of the same commodity, it doesn't mean that the nuances of the specific site aren't important, keeping in mind the commodity. Okay, the when. So ideally, a desktop red flag analysis and data room should be provided prior to the site visit. That's not always possible when you're doing diligence, but there's a few reasons for that. One is that you get a good understanding of the data, and the team has a chance to go through the data and see where there are gaps or where they want to ask questions of personnel at site or make observations at site of gaps with respect to either risk, financial issues, and basically inputs into the CapEx and OpEx into the financial model, because that will ultimately drive where things go when you're doing your diligence. And so, there's arguably 5 stages of project development. And, you know, the 5 stages are, I'm going to be general here. Obviously, there's overlap again here. And normally they're based on, if you look at EPCM companies or mining companies, they use classes of estimation and estimator. It depends on the class of estimation of what's what, but there are definitions in the CIM best practice guideline for what each stage is. But in general, the scoping study or PEA, the PFS or pre-feasibility study, a feasibility study, and then project execution, you know, while that's going on, construction monitoring, that sort of thing, and then operational mine or processing facility. And I think that it's very important that at different stages of development, project development, having site visits at different portions of time is important. But I think the big tip here is that having continuity. So if someone has done a site visit at a PFS stage of an acquisition, and that acquisition went through, but you know there's further financing required, having some continuity on that on the team or those people prior to or after that particular development stage is important. And the reason is because they will have some respective knowledge of the previous stages of that project development. So they'll understand why things are where they're at when they're opining on the value and the risk going forward. And at the same time, looking forward when there are recommendations made to the investors or to the people acquiring the mine, that those recommendations have a basis that can be checked on the next stage of project development. The trap here is that it doesn't always provide insight, even if you have continuity, into how the situation came to be at a particular place or stage, and why the progress post that visit, what happens regardless of your plans. And you know that happens when you limit the duration of the visit. So if you're only there for a day or 2 days because it was very remote and it was very hard to see things, you may not understand that if it's an operating facility, for example, that you know they had an upset condition yesterday and one of the excavators failed, and now you know that's the reason the plant is down. So now you're making risk assessment that, oh, this thing doesn't work. And that's just an example, right? So you don't know how things got to where they went to. So maybe at a PFS, there was a capital cost, and during project execution, some things went awry, or, you know, it could be geopolitical, it could be economic, it could be a lot of things. And then, so when you go for that second site visit, the issue is that when you look at it, you know, just saying, well, you know, that I've been here for a week and I'm going to take this snapshot. It is a snapshot in time. So the when is important in terms of continuity. And if you take that snapshot without understanding how things got to where they are and how they may progress in the future, I think it's very, very dangerous when you opine based on a site visit. So always keep in mind that it's a snapshot and try and investigate what got the condition to what it was in and where you think condition might go. So the why, and not this this talk is mostly about doing it for due diligence and M&A, so I highlighted those. But normally the site visits could be for 9 basic things, but when you look at the 9 items that may be reasons for executing a site visit, 3 of them are, you know, diligence based, you know, either M&A on behalf of lenders and investors, you know, just due diligence. If you're just going to put money in, and then, you know, valuations, and it could be construction monitoring or, you know, doing a credit facility, all sorts of different reasons. But 30% or 33%, I would say, our site visits are related to these type of things. I think the tip here is that previous experience in performing various activities above will help guide your site visit. But you know, often the investor or the people doing the acquisition or looking at having the most experienced people to go look at the site or to give opinions on that, and whether that's financial, legal, or technical. And I think that the key thing is having some younger professionals come along with experienced leaders. I know when I started in industry a long time ago, I really want to travel. I'm in mining, I want to travel. They didn't let me travel. I had to just work in operations and capital projects and just work where I was. By the time I got older and I started to get to sites and see a lot of different things, after you hit 25, 30 years and you've seen a lot, then you're like, I don't want to travel, but they want you to go. So I think that it's important to allow professional succession and some backup with a particular mandate. If a very experienced person gets sick, whatever discipline they are in, if they have some backup and a younger person with them, it allows for them to learn. At the same time, it allows for some continuity while you're doing your diligence and while you're trying to close deals. And it's quite important. Sorry about that. And the trap here is often people, because of schedule and time, may be sending completely inexperienced professionals on site visits without any respective technical and financial leadership to help them perform that visit, just to tick a box. And I think that this can be a real sad thing, because the cost to the owner investor could be pretty significant, not getting the value of the intent of the visit, which is normally 3 or 4-fold, a risk assessment, a value assessment, and to be able to understand whether the inputs in the financial model are going to hold. So the next W is the where, and it is about location. I think it's very key, and the reason is it's good to have individuals, because it is about the people that have some experience with the proximity of the location, because to travel 50 hours to go on a site visit today, to travel 50 hours back makes it very difficult, especially with time changes. And so having somebody that's available close for the site visit allows the investor or the people that are wanting to do the visit to have that person return if required, if something was missed. So proximity is nice to have, and especially if it's in country. There's all sorts of things that I'll get to below here, but local customs and culture. If it's in country, you don't have to get visas. So proximity is important. I think if they have previous knowledge of the property or operation, that's always helpful. And the key things like climatic conditions and elevation, which I'll talk about a bit later on, all play into understanding what you're going to get out of the site visit. Because if someone is unfamiliar with these things, then a portion of time during that site visit is going to be dedicated to learning these things. And when that happens, what happens is, because it's a limited portion of time, the focus can't be so much on doing the investigation that you really need to do while you're on that site visit. So location plays a pretty critical role. I'd say it's impossible to find a team that's going to get into all 5 of the W's we talked about here. But if you can identify 1 to 3 disciplines to help get all the things and streamline the site visit, you get a lot of value. I would prepare for the location, climate, elevation, culture to help maximize the acquisition portion of the time spent. And this I've seen often. This is an example of PPE and other necessities and multi-charging, but I've seen people come for a site visit and been on a site visit where we have 3 days. 1 day is getting PPP in order, another day is finding their phone, and then they end up 4 hours on the site and are able to talk to people on the site and look at things, and then they go home. And I'm like, wow, we spent 2.5 days organizing things, and that can happen with visas. So having either enough time to manage that or being prepared for everything that you're going to have to deal with is very helpful when you go. I think that one trap people fall into is, well, I'm going to be in country X, and so we're looking at something over there. Well, I'll just pop over and do a quick site visit because I have these other meetings, and that happens often to people. And I think that sometimes fitting site visits in with other priorities ends up costing you the true value of it, because what happens is you miss certain things and you're not really dedicating the time to actually go look at it. So if you are able to focus on just the site visit and make that a separate trip, I would recommend that, because the distraction of the other things can end up really negating the value that you get out of a site visit. So those are basically the 5 W's. Now, the second portion of this is about hidden treasures, which I think is in a lot of ways more valuable than the actual W's. And the reason is, in the W's, it's just basically practically directly what we're looking at. But when you're on a site visit, it's observation about what we see and what we're looking for. And you don't have to be a professional in certain areas to get a feeling for the culture of the organization of what you're looking at. And I think that looking at the management, site, environment, and health and safety practice is important. And a big perception of the organization's management and leadership can come from the site visit MES by listening to conversations of employees. This was recommended by the inductee of the Canadian Mining Hall of Fame and US Mining Hall of Fame. And when I talked to him, he said that when he goes on a site visit, yeah, he looks at a lot of different things, you know, technical things and financial things. But his biggest thing is in the lunchroom. While he sits there and listens to other people talking, the employees, are they happy? Are they sad? And that's giving him insight into the management team of that operation and that company. And that informs him whether he will actually invest. And people don't even see that. They don't even understand how important that is. But it is really important because the management and company really can drive. It could be a very value-added mine or a very value-added resource. But if you have poor management, it can suffer. And you could have a very, you know, poor or maybe marginal operation or mine. But if you have a great management team, they can really mitigate a lot of those risks. And so an assessment of that is as important as the objective, say, items that are either technical, legal, or financial. And so, I mean, when you're on a site visit, as a tip, if you see some violation of safety or something, then I think that it's important, and I've seen this before, to directly address it to the person that's you know, hosting you. And like I said, a great management can improve or sustain a project or operation, and poor management leader can destroy resource or overrun a capital project. I think the trap that happens when people go on site visits is they have an area of expertise or an area that they're really focused on, and they just look at that and they don't communicate some other observations. And I think that the big thing is keeping an open mind and asking as many questions outside of your particular expertise or comfort zone to gain as much as possible while you're on site. So another thing is, like I said, it's a lot about what you came to see that you can't see. And sorry, the slide's a bit messed up, but one of the managing directors for a major bank told me when I asked him about the site visit stuff, I said, "What do you see?" And he said that he still buys the New York Times newspaper. And he says it's not the article that I was interested in, but the articles that I'm unaware of that I read next to the article that I'm interested in that provide me with the insight and value. And the same thing on a site visit, right? So this again relates to observing and seeing things that you didn't plan on. So here's some examples of some photos I took during some site visits. On the left is one where they were showing me that they got this plant up and running. They had 4 actually operating plants that they got up and running ahead of schedule within 12 months of a mining operation, which, you know, normally you can't start plants at 12 months of inception. So, I mean, it's something, it's really fast. And so they're very proud. We went there and they're showing me this mill running, and you can see the picture on the left. And the first thing coming from Canada, a lot of places, like all sorts of safety violations, you know, there's no guards on the gear. And I'm like, but they're up and running. So, you know, so the risk now is not in, well, are they going to operate or make throughput? But there is a risk here of safety that needs to be addressed right away and needs to be put on. So while they're showing me, they're excited to show me, the hosts, that look, we're producing ahead of schedule, which is, you know, financially in the financial model, that's great when you're in the office. But when you come and look at this, you're like, well, that's not very safe. Maybe we need to slow down, stop that, put a guard on around these things, and then you can restart. And they were at another mine site. In the second photo you see here is a lot of rocks they're giving you. And I was looking at the geologist, and they were showing me this because there's free gold. So it's always nice to see free gold. It means that, yeah, there's gold in the material, and it's a good project. So I'm looking at it, but as you can see here, you can see a bit of flakiness in the sample here. And the free gold's prevalent, and so is the pyrite. But the key thing I looked at here is it's pretty flaky, and when I rubbed my hand on it, it was pretty easy to crumble. So right away in my mind was like, this is not going to be problematic in terms of grinding or breaking up. The energy requirement should be lower. And it's something I can go back and check later on. The other thing I thought about is, well, you can see the quartz, you know, is this amenable to something like ore sorting? And what does that mean? So a bunch of things went through my mind, although geology was like, hey, look at the gold, look at the gold. The other thing here is that there were other things you could see in the sample. And then this other plant here, which I like gold. So this third picture, they were taking us through a place. This is in South America, and they were showing us the operation and things, and they had cordoned off an area that they were producing, but those are mercury amalgamation drums. So they were actually making gold by using mercury and amalgamating mercury, which, in a lot of places isn't allowed. Here it was allowed because they had a permit for it, which is rare. But the interesting thing was that they were hiding it. But when we're walking, I could see it and I'm like, oh, they're using mercury. Now, this is something that, they're not focused on. But as an aside, while you're walking through, you see something like this, you're like, ah, this is important. They no longer do that. They've changed their processes and stuff. But it was important for the investor because institutional investors weren't allowed to invest in this particular property because of this issue that we observed. So I think these things are important of what you're not really there to see. And the host is going to focus you on what their successes are and the key things that they want to show you. And it's important that you just don't look at this speedometer, but checking out whether the wheels are on the car or not. That's just an analogy, like that guard on this mill or the mercury they're producing here, and that's the reason for that. So again, here we're going through this another mine, and at this mine, they were showing off in the picture on the left here that that there's no blasting required. It's all free digging, and you can see how vertical the walls are here, this mine, but there's a failure here. So while they're showing how great it is that they're not using blasting and they're saving that money, and you can see in the OPEX, the mining OPEX is very, very low here. But when you look at, there's a failure there, and we recognize it. We made it a risk, and we talked about it with the owners and with the investors. And the sister mine to this facility within 6 months ended up having a failure where one of their excavators actually fell off the edge because no berms there, and there was a fatality. So these type of risks, although from a data point, the operating cost of this mine is excellent, but that risk that can happen of these failures was there. And this picture on the right, this is at elevation, actually. The picture on the right is at 4,000 meters. And some of you may know where that is, but that rock is very, very big. So, they're just taking photos because it's a big boulder that came off the top of the mountain. But the interesting thing is it tells you about the competence of the material on the rock. And this is a very big mine. They do over 100,000 tons a day. And so thinking of them having to move things and then coming up against equipment like this or, rocks like this, that you're going to have some trouble sometimes. So it's just an observation that was made when people are just taking a picture of a big rock. And again, this on the left is another photo at elevation. At this elevation, this is about 5,500 meters, so well above Everest. And the big thing was that this is a desert, so there should have been no moisture. They're actually pumping water up from the coast up over 5 kilometers to get to this particular site. And while we were driving through, we saw wildlife. There's animals there. So what it says is there is enough moisture to sustain wildlife. But the second thing it told us was that there are environmental considerations that we have to have up here for an ecosystem that has some biodiversity. It's not something you would think in a desert at that elevation that, oh, this needs to be top of mind. And up here in the top right corner, this was another Diligence set of mine where they were struggling with throughput. It wasn't quite in distress, but they were struggling with throughput in the crusher, and they were really having problems, and they were looking at financing to help put in some capital to fix this problem in the front end to not get enough throughput through their facility. And so I asked to look at the material that was coming up from underground that they were feeding into the crusher. And this picture on the right is a picture of their pile that they were feeding into the primary crusher. And it was just plugging up the screens. So all this garbage was coming from underground. And the first thought I had was like, look, you have all this junk here. That's what's causing the holdup. We don't need more capital. We just need to clean up the way we operate. And it's things like that where didn't come to see this, we weren't going to look at solving any problems. We had just seen that they weren't having throughput problems. And when I asked to see what the material was like that was going in, they took me to this pile and I could see the garbage. Okay. On the right-hand side is another Diligence, again at elevation, not the same as the other pictures at elevation. But this one was interesting because you can see a bit of an exploration camp to the bottom right of that photo. And that's where the drilling was happening. But we're looking at where the portal to the mine was, where this truck is, where I took the photo. And the issue was that to get equipment up here, the road is only wide enough for one vehicle. and you can see the switchbacks on here, that it would be impossible to get it. So we had to relook at this project altogether from a financial view of having to upgrade all of the roads and infrastructure to get up that high just to begin. And that put the schedule back in the cash flow model, and that changed fundamentally the view on this particular property on the right. And again, it's not something that we plan to see, but it's something that came up just looking at the road width, which we wouldn't have known had we not been up there at site. So this is a bit of a video. I'm going to try and play it. I don't know how it's going to come through for everybody, but I just turn this volume down a little bit. So this is another mine site. This has 4 pits. And we're looking, the owner of this mine is actually flying the helicopter, and he's showing how there's an extra 12 kilometers of trend beyond the property that they have. And he's very excited about and showing his open pits that are operating. These are mining trucks. And while I'm sitting next to him and listening to the positive story, if you look on the left-hand side, there's no berm along where the truck is running, and there are no dewatering pumps just below where we were with all the water in the pits. So you see no pumps and hoses, and if you look at the tailings pond on the left-hand side, it's almost right to the top, right next to the open pit. You can see that there's no berms next to the thing. So when I was there and they're talking about the trend and where there's going to be more material, you can see here that there are issues, and as the investors are sitting behind me as we're talking about some of these items, and we're looking at the pits. But these are things that all went into the report ultimately, of the berms missing and some of the stuff with the tailings. And tailings, you know, are obviously a high priority for many people now. And these are things that the owner, you know, obviously wasn't looking to share, that was a key thing. But again, it's something, the observation that we weren't there to see, but was material in doing our diligence for the property. So I thought that was important to see. So that's basically it. For our things, here's a last page, kind of a recommendations for site visits. Questions, please ask as many questions as you can when you're there, because when the site visit personnel are very rare to get access to. Normally, you know, it's office and corporate people and management, and to actually be able to talk to people that are working at site, they really know what's going on. Operators, maintenance people, environmental people, legal, financial people, they'll be able to tell you really what's happening with that particular site. I would listen very actively to everything, and I don't mean just in a meeting sense. What I mean to say is like my previous friend said in the lunchroom, just listening to people talk next to you and how they're relating to each other and what they see as problems when they're discussing it amongst themselves is very valuable. Materiality, you know, I'd look at when you're on a site visit, is there health, safety, environmental, or economic impact to my observation? And is it material for any of the other stakeholders, you know, and financial for sure, because we're doing due diligence. But these are some other key things that I think are very important. Communication, if there's urgent, like what you saw with the no guards on the on the equipment and things like that, then I think it should be brought up immediately to the host, and we did, for example, in that particular visit. And if it's not urgent at the correct level and correct organization while on site, it's important to give them feedback right there. And I'm really a big fan of giving feedback directly at the end of the site visit, both to whomever, you know, if we're doing advisory work or as an investor ourselves, to both the host and to the people looking at whatever the diligence is for. The continuity of communication is quite important, I believe, because once you're on a site visit and it's done, then, you know, to talk and answer questions back and forth with various stakeholders is important to keep some continuity with the people at site. The big thing is documentation of some of these observations by photo or video, if it's permitted. You have to ask permission, of course, and obviously any non-disclosure confidentiality. And what I often would recommend is making notes at the end of every day, so that later on, if for follow-up reporting and even for a bit of you know, of auditing, you have a record of what you saw and what you thought. The other key thing I think is that's important to most people is quantifying things, any risks, opportunities, and recommendations, So when I'm asking them, oh, you need to put a guard on that mill, or you need to put some berms here for that tailings facility, to be able to go, what's the schedule going to be for that, and what's the cost going to be to that? Because that's material when you're doing diligence, right? So quantification of your observations, I think, is quite helpful. And then maintaining relationships with the site personnel, because later on any DD effort, it's very critical, because there may be something while you're going through things to be able to pick up the phone and say, hey, I saw this, or I don't remember this. Can you help me elaborate on this data, or I have this information from the data room. Can you help clarify? It's very, very helpful. So that's it for my talk. I don't know if you guys have any questions. Please feel free.
I believe we've got a few questions in the chat box, so let me just read them. The first one basically says, would you bring a union rep from one of your operations to a site visit of a target? And then there's another question, how would that impact the info you obtain? Would it impact your union relations? Would it create conflict with the target reunion?
Okay, so
I
a
know
few
it's
things
four questions.
depends on, yeah, that's a few questions. It depends on the union and the jurisdiction, I'm sure. But first and foremost, I would encourage it for a number of different reasons. One, to have an understanding, your union rep will have a view on how things are done, and will within your current organization, and then will also have a view on how things may or may not be done at your target. So it's important to get their view in terms of a labor issue. Yeah, I think that whether that would cause problems between the unions, I'm not sure. That really depends on the unions. Often, some targets may be non-unionized, in which case, then probably you wouldn't want to bring your union to a non-unionized operation, especially if it's in another country, because it just wouldn't make sense. And jurisdictionally, if a union's in another country, I'm not sure whether that's going to work out. So I would encourage it, though, if you have a target within the same jurisdiction or jurisdictional space, because ultimately, those labor agreements have to be respected, and both sets would understand, especially if it's an acquisition, that the management company that you're buying, or the company that you're buying, already has commitments to their labor agreement. So having your union rep come to see that, they're going to understand that. And so it's good if everybody can be on the same page, right? I mean, I don't see, it's not going to impact the bargaining agreement for either, in my opinion.
Okay. Before I read the other questions, if there's any other additional questions that you'd like to ask, feel free to include them in the chat box in the menu with Zoom, and just type them up and we will definitely read them all. Next question is, at what time in the M&A process will the data collected from a site visit be most valuable early, mid, or late in the process?
It's funny. I would have originally said early in the process, but I would say all along. And this is the reason why. Early in the process is super valuable in the data room, because you can go on your site visit and then you can verify that and put it into the model. But my experience has been that as you're doing diligence, things change, material things change, and the data room changes. So what I mean to say is production numbers can vary. They could change in capital. They may have changes in capital in or out. They can have change in operating in or out. So as you get material changes going, to say, having data later in the process is better because all those things have been done. The issue is that hasn't bought you a lot of time to do the evaluation. If you have it early and you start the evaluation, it's easier to modify your evaluation as you go, your diligence as you go. And then if changes are made, at least even towards the end, at least you're up to date on those changes. So I would say throughout the chain is important to have that.
Okay.
I wouldn't say early or late. I would say from beginning to end, as early as you can, and until you sign on the dotted line.
There's another question that came in. It's how difficult is it to maintain follow-up flow of info after the site visit at an informal basis with SMEs? And do you find the comms can be overmanaged, controlled, and is this a red flag?
So yes, I find it is very difficult once the site visit is over, and depends on the parties. So in certain cases, parties are very transparent and have no problem sharing everything. Okay, but in certain cases, it is very measured and very controlled, especially if there is an interim advisor involved in the transaction. So normally, if it's junior to junior, it can be quite transparent. It's very small. But if it's a major mining companies and institutional investors, then it will be communication will be very, very measured and controlled, and it will be very difficult. I wouldn't say it's always a red flag. Sometimes it's a matter of prudence, given the size of massive organizations, and sometimes it definitely can be a red flag, especially on material issues. So if you are trying to look for an answer from a group or somebody, and you're getting resistance, and it's a very straightforward thing, then yeah, that would be a red flag to me. However, if it's more a matter of bureaucracy, because it's a very big organization, and they go, okay, well, we're going to put that in the data room, you're going to get it in a week. Well, I don't think that's a red flag. That's just the pace of very, very big M&A.
A question, great point in respect of providing immediate and respectful feedback beyond highlighting points of interest. In my experience, providing feedback also builds positive near and longer term relations between the host and guests on site visits and expands the opportunities to learn about the asset. It wasn't a question, it was just a comment.
Absolutely
I thought there
true.
was a question infused there. And then there's another comment. Thank you for your insightful points on the DD work. Another question. Any thoughts in speaking with local operators, quote, unplanned on the floor when on site, the gain insight from those doing the work?
Oh, 100%, 100%. Because uh, well, I'll give two examples. One is often they have great ideas that have been missed by management, or they feel unheard. So, they feel like they can explain to somebody their gripes of things that can be improved, which are material that you can use in your due diligence. The other side of that coin is often they're proud of some accomplishments that they've made. And those are very, very important too, because they provide upside. And maybe they have ideas that provide upside. And upside is important when you're doing your DD as well. So both, I think, are very, very important from people on the floor. And more than that, you need to know the people on the floor, because if the acquisition goes through, the first questions get asked is, well, who are we keeping? Who are we not? Especially if you're combining staffing and people like that. So I think it's very, very important to get it from the floor. And it's often untarnished, because it has not been polished in a PowerPoint presentation about what's going on there. They're going to give you their real opinion, and I really believe that's very, very valuable. I mean, in some cases, you have to be able to weed some of it, but for sure, I'm a big fan of talking to everybody at site if you can, if you're able to.
Okay. I think there's one last question, but again, if anybody has additional questions, by all means, we encourage you to type them into the chat box, and we would be delighted to to um, present it to Aku. Okay, so you have not explicitly mentioned management of confidential information, including information and observations collected during a site visit. Any thoughts on how the team, including consultants and advisors, should manage confidentiality beyond the obvious?
Yeah, actually, beyond the obvious, there's quite a few. So obviously there's the CA and NDA and the obvious stuff that you can't talk about, how much money they make and what throughputs there are and what the ownership structure is, those things, yeah. But there's more to it than that in terms of confidentiality. I can give an example. So I did a diligence on behalf of I'll be general, on behalf of a Brazilian company for a mine in Chile that was owned by Japanese. So when we're on the site visit, some questions got asked about, the financial side of things. Of course, whether it's consultants or not, we won't discuss that, and it's pretty easy and evident. But while we were in the vehicle and I had the Brazilian investors with me, I asked the Chileno leadership, which was hosting the visit, that, hey, how will you go about this in terms of management? Because now your ownership, if these people go through, will become, and they were all there. It was pretty transparent that now your ownership will be Brazilian and you're a Chileno company. And he said, culturally, we're struggling more with the Japanese ownership because, when they make a plan, they like to go through things all the way. And then when we see a difference as Chilenos, if we're not working out that plan, then we pivot, and they seem to go more steady with the plan. And here we think that if it's under Brazilian ownership, we'll be okay with that. And this is at the C-level. So I'm talking about presidents and C-level people. And so we go through that, and I thought that's very instructive, right? And that really helped this Brazilian team decide whether they're going to move forward with the deal or not. But this is an example. So I'm sharing this with a whole group of people. There's over 100 people in this call. Now, that's not confidential. Nobody knows what the deal was. Nobody knows the company. It doesn't matter. It's, that's not material, right? I didn't talk about that. However, if you're to ask me what companies, or you have to ask me what mines, what commodities, then I wouldn't share that, because then that gives you insight into what it would be. So I think that the appropriate amount of discretion has to be made when we discuss these things. And the one thing is that for sure, NDAs, CAs, and I guess the key thing is always respecting two sets of people. The host, it's their property, whether it's pictures, video, or whatever they say goes. And the people that are looking at it, they don't want people to know what they're looking at and why, and what their strategic plans are. So just keeping their names and their views and why they're looking at something completely confidential. That's not obvious, but I would recommend not sharing any of it with anyone.
Aku, there's another question. If one relies on an independent engineer and reviews only reports from the data room, what should be asked to the IE to ensure all risks are captured, documented, and qualified as part of the site visit? And is there a suggested approach?
Okay, say that one again, because that's real.
So if one
So if you, Go ahead.
relies on an independent engineer
Yeah,
and reviews only reports from the data room, what should be asked to the IE to ensure that all the risks are captured, documented, qualified as part of the site visit? And is there a suggested approach that you have?
absolutely. So there's three. One would be, what information as an IE did you not have? That would be the first thing, because in that data room, IEs normally have a process by which they go through, and they have a bit of a checklist, say, if you will, per discipline. Now, that checklist, if it's not in the data room, they either request it during the gap analysis. But, if it's a really initial one, what they'll do is they'll just do benchmarking, or they often will lift things out of what, say, the sell side has. And this has been a big personal gripe of mine, that if somebody puts out a feasibility study, IE is not doing their job by just repeating the feasibility study to you because it's in the data room. You know what I mean? They need to opine on that. So as an owner investor, I would definitely ask the IE to give an opinion on the claims that are done by discipline and the risk matrix. I would ask for the risk matrix as well from that IE. And I would really pivot through that to understand how they've opined separately on that. And secondly, I would ask them that how do they feel confident in their assessment as an IE in the data room, that data room is sufficient, and ask them to provide you with a qualitative and quantitative view of the data room. Because they know when you look at 1,000 data rooms, you can tell right away that this data room has nothing in it, or it's very weak, or it's a very robust data room. And a simple way to look at it is, if somebody's claiming that they're a feasibility study level, it's an example, and they have 10 drill holes in the database, that's it. That is not a feasibility study level of geological information. You'd have the models, you'd have all sorts of other things. And so the IE can provide you with a checklist at that particular stage of development for that project of what they should be looking for and how close that data room was to what's expected at that stage of project in terms of data. And that will give you an idea of whether they've done the full job in terms of providing you information from that data room. I say the risk assessment is the key, quantification and qualification of that risk assessment as well. And that IE, I would also venture to say that it should be a bit jurisdictional specific, because in certain places, and depending on the investors, they may have other ESG rules that require more than just a technical IE. They may have other, I would say legal, and especially in the environmental and social side, social things that often the data rooms are missing. So it depends on the investor point, but for sure those things I would have that IE check to give you a good view without a site visit in my data room.
Another question is, during an acquisition in a foreign jurisdictions, do you recommend visiting the mining department and government officials on the site visit, or should it just be a second separate trip?
I would do it at the same time. There's a few reasons for doing it at the same time. The reasons are because, one, you can query and question the site or the management or the leadership of that particular organization while you're there jurisdictionally. But at the same time, if you are in touch with the government or the local representatives and things like that, you will have insight into what they're looking for. So that will help you understand whether the particular operation site company are meeting some of those. And you will also be able to determine from a personal and subjective way what that relationship is like. If they know each other and they're happy about each other and they're talking about it when you speak to both groups, you know you're going to be in a better position when you go in for that acquisition. If they're, a little discontent, if they don't like to talk to each other, if I've been in a case where we go to see the government people and they're like, you're the first time somebody's come to talk to us, and they're really upset. And, so you're like, whoa, we didn't see that. So for sure, I would recommend doing it at the same time, because look, you can always go back to either if you need more, but I would never negate a chance to speak to as many groups as possible and stakeholders.
We have a couple more questions. So how about influence? Should those visiting a site have on the agenda for the visit? Is there a typical agenda, or can there be specific focus on areas of concern? And how is this best handled?
So I think that, again, there's a few aspects to this. I think that before the site visit, the agenda should be broken down in three ways. One, the overarching reason for the site visit, who's driving it. If it's an investor driving it, they'll have key things that they want to look at. If it's IE or some independent, they'll have a group of things that they want to look at. So that those things should kind of be sussed out before, and to let the host know. And then the second part of that would be to break out groups. So maybe the first day you go, you get a presentation on what the site's about, blah, blah, blah. And then you break out into separate subgroups. So maybe your finance professionals sit with their accounting controllers, finance department, your metallurgist goes with the process people, your geologist goes with the geology team, and you start to do some breakout over the next 2 or 3 days to get into the specifics for those key areas that you want to look for in terms of risk. And then I would say that the third step would be to come back together as a group at the end and then go through the items and highlight areas of questions or risks that you can discuss, so that when you go back, you can make a full assessment. But for sure, I think that there's agenda should be made. I think that that the groups should be together at once with an overarching view of what they're looking for. And then, I mean, like, for instance, everybody should be looking at safety. That shouldn't even be discussed. Everybody should have that as top of mind. You know what I mean? That's just a normal thing. However, there's certain things that of risk that both you as an organization, whether you're the investor or you're an IE, are going to be looking for early, because in the data room you go, metallurgy looks okay, this looks okay, but we're really concerned about mining method here. Or maybe here, processing, the infrastructure, everything all looks good, the mining method looks good, but really we're worried about, this river goes through here and there's a community and there's a social issue that we need to. So you will have, and normally some of the biggest funds in the world for mining, I've talked to a few managing directors and boss people there that when they go on site visit, and one of them told me that Ku, when I go there, any project that we look at investing in, we can always nail it down to 3 key things that are the real crux of this. Everything else is pretty okay, but these 3 things, and whatever the 3 things may be, in some cases it may be the resource, in some cases, it might be permitting. But he said you can nail down big mining projects normally down to 1 to 3 things. That's it. So if you have an idea of that, that's going to be very helpful because then you know where your groups or teams will be focused on and where to focus for that particular site visit.
Very nice. We have a couple more questions still. How about approaching contractors and service providers for their contracts and what they expected or not contracted, and history of turnover of contractors and service providers, permits, have they been reviewed, or issues because of complaints or infractions?
Oh, for sure. It's something that, especially if it's contract mining and things like that, for sure, I would talk to the host about providing that information up front or in the data room, and then I would go ask to speak to those contractors directly. I wouldn't do it without their permission. I want everybody to know that, listen, I want to talk to your contractor, and it should be transparent. They should be okay to do that, even if they've had disagreements, right? Because you're going to incur those costs, or you're going to have to deal with that relationship. That goes for off takers as well. I would be looking for off take contracts and for, anything like that. Any royalties that you have, streams, any other debt facilities that are on the particular property or company. For sure, I would keep that in mind as well, to be able to speak to those people, because they're going to be stakeholders if you take over.
This next one is a comment and the question. I find that the IE process can be stifled or constrained by too much direct involvement by the interested parties in the buy, sell, or M&A deal. How do you defend or protect your independence and honest opinions, especially with respect to identification of risks?
Well, I think that if you're IE, I've been IE, obviously, if you're IE, our bread and butter is honesty and integrity, right? We're selling our services on our word. So it's better to be honest and have the deal fail and have everybody upset with you, in my opinion, than to allow them to strong arm or bully. And it happens on both buy and sell side, and it happens in terms of the investor because the deal is very lucrative for many people. However, when things go sour, the first person that they're going to come to is the IE. And they're gonna and they're gonna go, well, you told us this is what it was going to be, and you didn't warn us it wasn't going to be that. And so I think that there is a lot of noise and a lot of pushback from the proponents of projects or deals on both sides to IE, but I mean it's independent expert or independent engineering for a reason. And I think that as long as you can justify it. One thing that I would mention, though, having been IEs, and I mention this to many people, that it's very, very rare that you find a red flag, fatal flaw right from the get-go in a mining project. Yes, will capital overrun? Yes, but a lot of these things are mitigable. The thing that's not is if there's no resource in the ground, BRIEX, yeah, that's not mitigable, right? But a lot of things from an operating mining side, metallurgy, processing, infrastructure side can be handled in terms of money or price sensitivity with the commodity. So as an IE, I think the key thing to remember is that if you identify a high risk, to just quantify what the mitigative action is, the cost and the schedule, and provide that and say, look, I'm not tanking the deal. I'm not tanking what you guys want to do here. But if you want to do it, these are going to be the costs to you, and here's the probability of that happening, and this is the schedule impact, and you need to consider that in your financial model and your analysis. And yes, they're going to give you pushback, that that's standard, but often the ones that accept it, accept the IE's opinion, are the ones that are most successful in making deals happen and making things go forward. Often, my experience has been the proponents that are unwilling to listen to IE or really push them as a transactional thing, that I've hired you, so you must say what I want. They often end up in a bad condition, and often IEs that participate in that don't last too long. They're not long in the game of being an independent. And that's my experience.
And one last question. Is there a minimum set of development that one must note on the project site at the PEA stage, PFS stage, and FS stage? As in, would there be a good CIM standard or Australian or any other global standard to check against? RPM used to have a number 128, but I don't think these are being updated. Please comment on the different standards.
Yeah. There are for sure standards at a given stage. What I would recommend to most people as of late, I know JORC is coming out with a new study in Australia for 2025, but the best one to date, I would say right now, is the CIM best practices guideline. for 43101. So in the CIM best practice guidelines for 43101, they have best practice guidelines for resource and reserve estimation. They have best practice guidelines for mining, best practice guidelines for metallurgy and processing. And in there, at different stages, PEA, PFS, FS, there's a bit of a checklist. And whoever it is that can email me, I'd be happy to send you the checklist for different stages of the project that can be used by IEs. And because it's best practice guideline by CIM, the nice thing is that it applies directly to 4311. And right now, in my opinion, it's more rigorous than JORC or SARMCO or any of the others. So in general, I think that that's a nice standard to go by. It will probably evolve with time, but for now, if you don't have anything, I'd use the CIM best practices guidelines for 4311 for the different disciplines. Now, they don't have one for certain things like legal, but I'm talking more technical here.
Okay, there's two comments. Actually, I think there's more questions now. There's two comments. Aku, very well done. Many thanks. Our next comment is Mr. Patel. Thank you for your pragmatic and thorough thoughtfulness observations on due diligence activities, specifically the importance of a diverse due diligence of a diverse due diligence team, the site visit itself, and all observations, gains, regards. The one thing I forgot is because you had just mentioned about please email me. What's your email address in case people want to email you?
Oh, apatel@humilispensar.com.
Okay, can you just a little slower? How's that?
So apatel@humilispensar, humilis-pensar, the name of the company here,
Okay.
humilis-pensar.com.
Okay, wonderful. Okay, so next question. Okay, organizing a proper site visit can be a time-consuming, people mobilizing, and logistically complicated affair. What can you do to ensure that a company asking for the site visit sends the right people for the DDD? I mean, for the DD.
A few things. One, I would request the CVs of everybody that wants to go on the site visit. And the second thing that they don't often ask for, but I would ask for, is which other sites have they visited that are like in terms of commodity, location, I would ask for that as well to, because you have a CV of stuff, right? But example, if somebody wanted me to go on a site visit, then they should be asking me, what other site visits have you been on with this particular commodity in this location at this elevation or by the sea or whatever, and in this country? And if I can demonstrate that I've looked at something around there, I think that's important. Now, it doesn't always have to be, because you could be an expert in one thing and it doesn't matter about those others, but it gives you a roundabout thing of just give a bit of an explanation of their experience within that site visit, right? So I think, and if they have site, don't forget, these sites have already been operating or running or been projects for years, restarts, or they've been looking at it. Mining sites don't pop up, oh, we found a mine and we're going to build it next week. So a lot of these things have been looked at for a long, long time. And if you ask, have you looked at this previously? That's also a very important question for people on the site visit. Because if you can find people that have already been there, that's going to put you so far ahead. Now, that's also going to introduce a bias, but you can account for the bias and you can explain to that person, listen, whatever you looked at before, this is a new thing, we're a new company, fine. But at least even with bias, you're getting a level of experience that's beyond just totally never seen in place.
Okay. I was going to say one last question. Yeah, actually, one last question, three comments. Okay, so last question. You mentioned about reviewing the offtake contract. What technical aspects would you look into to detect any red flags or critical concerns?
Okay, so the technical aspects of the offtake, I'd look at the bonuses and penalties for specific metals, especially if they're secondary minerals, metals, or commodities within the offtake. Any royalties or hidden royalties, that's always a bit of a issue in terms of risk, because often maybe you have a streamer that's financing. So although you have an offtake agreement that's going to pay you for X metal B, that metal B may be spoken for. So those are the type of things that I keep technically looking at in that offtake agreement, and the bonuses and penalties. And I look at the bonuses and penalties against the geometallurgy, because the bonuses and penalties in the offtake agreement are for the product that comes out of the processing plant at the end. However, it's going to give you insight on, if you look at the geology, are those elements that could be causing penalties, or some of the elements or commodities that may be giving you bonuses, how prevalent are they in the ore body itself? You know, so that's going to give you some insight into whether this is going to turn into an issue or not. And that's going to be very helpful. I just dealt with something like that now, where I was like, this is going to be an issue. And sure enough, it turned into something that shut the deal down. So.
Okay, and three last remarks. Thanks, Aku, for the insightful presentation. Thanks for a great presentation, and thank you for sharing your experience through this presentation. So thank you very much. I'm just gonna share my screen for a second, and I'm gonna show you something. Bear with me for 2 seconds. So for some of you, if you're not on our mailing list and wish to get on our mailing list, I encourage you to visit our website, cimmes.org, okay? And if you scroll down right here, okay, stay connected. Just send us your details and we'll gladly place you in our mailing list, right? We do not share your details with anybody, so don't worry about it. We do not sell it. We do not do anything, right? We just inform you of upcoming events. In terms of upcoming events, as you can see here, our next event is really May 29, if I'm not mistaken. Actually, no, even before then. We've got an event on, I believe, April 30th, okay, featuring Bill Roscoe. Bill Roscoe is a geologist with more than 50 years of experience in the mining industry in Canada and internationally. He is also a CIM distinguished lecturer. I believe his presentation is entitled, "Is the Net Present Value of Preliminary Economic Assessment Indicative of the Market Value of a Mineral Property?" You're going to be receiving notification of this event in the very near future. In terms of, Simona was saying just before, this is being recorded. So if you're interested in reviewing this video again, or any of our past events where we recorded the video, you just have to go to our website, go click here on National right here. And then on the right-hand side right here, go under highlights from past CIM MES events. And as you can see, and it will be literally right here on top, above our January 29th event. But if you wish to, review our video for our January 29th event, by all means, just click here on video and you can access it. And we've got a number of past events that you can review at your leisure. And yeah, that's it. So without further ado, I will let Simona take over.
All right. Well, we would like to express our sincere thanks to Aku for his informative and engaging presentation. Thank you very much as well to all of those who joined us. We really appreciate your time and your participation in this and all the great questions you've asked. And of course, a very special thank you to our sponsor, IAMGOLD, for making the seminar possible. And Aku Patel, hopefully you can come back and give another talk because I think this was very engaging and we learned a lot from it. Looking forward to seeing you again at our upcoming events. Thank you and have a great day.
Actually, one last thing, just
Simona.
because
Thank you very much.
Jackie sent me a message. The MES and CIM Toronto Branch 2025 Virtual Student Day will take place on Tuesday, March 25th at 11 a.m. Eastern Time. So feel free to join us there. And thank you.
Thank you.
Thank you.